Most traders look at the chart and feel confused. But what if I told you, you only need one thing to start making money from the market, and that is mastering supply and demand zones. Now here's where the confusion begins. There are different types of supply and demand zones, and this is where many traders get lost. They draw levels everywhere, take impulsive entries, and then wonder why price moves perfectly against them. But by the end of this video, you'll understand what a true fresh zone looks like, how to trade it with precision, and the costly mistakes you must avoid to protect your capital. Do well to subscribe so as not to miss any of my videos. So let's begin with one of the most powerful concepts in trading: fresh supply and demand zones. A fresh supply or demand zone is not just a rectangle on your chart. It is a footprint of imbalance, a point where price moves so aggressively that it left behind unfilled institutional orders. Picture this: price is moving normally. Then suddenly, boom, a strong, explosive move shoots upward. No hesitation, no deep pullback. Right before that move, you'll notice a small, tight consolidation. That small base is where large orders were quietly placed. That is your fresh demand zone. For supply, it's the opposite: a sharp, aggressive drop from a clean base. But the most important word here is fresh. It means price has not returned to that zone since the move occurred. Why does that matter? Because the first time price comes back, that's when the remaining orders get filled. That's when price is most likely to react. That's where your highest probability trade exists. This is where everything changes. Because identifying a fresh zone is one thing, trading it effectively is what separates those who watch the market from those who get paid by it. You've identified a clean, fresh zone. Price left with strong momentum. The setup looks perfect. Now what next? You do nothing. Yes, nothing. You wait. Because the market doesn't reward impatience. It rewards precision. Price must come back to your zone. Not halfway, not close enough. To the zone. Chasing price in the middle of nowhere is where most traders quietly drain their accounts without even realizing it. Now price begins to return. This is where the real game starts. As price enters your zone, resist the urge to jump in blindly. This is not your signal yet. This is your moment to observe. Watch closely. Is the momentum slowing down? Are candles getting smaller? Do you see rejection wicks forming? Sometimes price will even start moving sideways slightly. That's not random. That's the market responding to the zone. That's your first clue that orders are being activated. Now you make a decision, not based on emotion, but on structure. You have two ways to enter. The first is for the bold. As soon as price taps the zone, you enter, no hesitation. This is called an aggressive entry. It works best when the zone is clean, fresh, and the move away was strong. But understand this: with confidence must come discipline. Your risk must be controlled. The second approach is more patient, more refined. You wait for confirmation. You let price show its hand first. Maybe an engulfing candle appears. Maybe structure shifts slightly. Maybe rejection becomes obvious. Then, and only then, you step in. This is safer. You may miss some trades. You may get a slightly smaller profit, but you significantly reduce unnecessary losses. Now let's talk about what protects you. Your stop loss. This is not a guess. This is not, let me just put it somewhere. Your stop loss goes just beyond the zone. Because here's the truth. If price breaks clean through that zone, then the reason you entered the trade no longer exists. And that's okay. A professional doesn't fight the market. They exit, accept, and move on quickly. And now the part most traders overlook: taking profit. Too many traders enter well and exit poorly. They close too early out of fear or too late out of greed. But you trade with intention. You look left on the chart. Where are previous highs or lows? Where is liquidity likely sitting? Where would other traders get trapped? That's where price is drawn to. That's where you aim. Master this process with fresh zones, and you'll notice something shift. You're no longer reacting to price. You're anticipating it. But don't get too comfortable yet, because the market has another layer. Sometimes price will appear to respect a zone, only to break it and reverse completely. Why? because not all moves are what they seem. In the next lesson, you'll uncover how the market uses liquidity and manipulation around these zones, and how to stop being caught on the wrong side of the move. Follow closely,